Are we live? Are we live? Are we live? Okay, I see people pulling up. I see people pulling up, so that means it might be working. Man, last week, I had some technical difficulties last week. I'm talking about it was like 3:05. Well, people went to DMing me. They were like, "Yo, we not live this week." Uh, Let me get somebody put a one in the chat if y'all can hear me. I want to make sure everything working before, cause I get to running my mouth and don't nobody be hearing nothing. Don't nobody say nothing either. I see my mom in here. I see my son in here. I see my son in here. I'm about to yell back there and see if my son can hear me, y'all. I don't want y'all to hear me yelling. Now, I see the ones. I see the ones. Never mind. I see the ones. I guess my son got his headphones on cause I was asking if Katie hear me. He ain't say nothing. All right, y'all. Let's get into it, man. I see my sweetie tapping in. Let's get into it, y'all. Y'all know what it is. This Tim's Tidbit. Thank y'all for pulling up. Let me get me some light up under my eyes. Got it dark under there. Let me see how that. I kind of like that. I kind of like how I look like that right there. What y'all like? Y'all like the light off my face or the light on my face, man? I like how the light look off my face, man. All right, y'all, let's get into it, man. I'm leaving the light on my face, get them shadows out my eyes. Let's get into it, man. Let me stop being a videographer for a minute, man. We gonna jump right into it. Appreciate everybody for pulling up, man. You can be anywhere in the world, but you want to be here on Instagram and for those on YouTube. Some people watching on YouTube. I think Mark the only one over there by himself. I don't know. My sweetie say light on, so I'm going with light. I'm gonna stay with lights on cause it's about what she want. Somebody said turn lights on. Who that is? Is that Briscoe? Is that Briscoe? Say turn the light. Jamming Life. Shout out Briscoe, man. I looked at an interview. If y'all ain't seen Briscoe interview on Trading with a Dummy, y'all tap in with Briscoe interview, man. Y'all can see my broke chair back there. Let me move. I don't like it. Let me move that chair, man. That chair ugly. Let me move the broke chair. See you get the junk off camera, man. Get the junk off camera, Tim. Come on, man. Tighten up. Yeah, shout out Briscoe, man. If y'all ain't checked out Briscoe interview on Trading with a Dummy, man, y'all need to go check that out, man. Briscoe had a real nice interview. Jamie Life, I hope I'm saying that right. Y'all follow her Jamie Life page. She got a dope mentorship. I don't know if I'm putting it out wrong, but it's like teach you how to trade and pass combines, and you know what I'm saying. If you learn how to pass a combine, you can trade other people's money in the futures market, or you can trade your own money if you want to. Check out the homie Briscoe, man, the homegirl Briscoe. That's I met Briscoe through Draco. I think she might have been in Bun Bullets when I was in there too. I can't remember, but anyway, I know her through Draco. Big Draco. Yeah, man, let's get into it, man. Shout out to everybody that's on pulling up. We gonna get into it. Y'all see what it is. Spider Gang. Spider Gang. Look at that, man. Y'all, let me show y'all the spot. Look at that Spider Gang, man. Stop playing with it. Till's Tidbits. Spider Gang. Look at it. I still got the graphic. I still got the graphic design artwork. Look, I cleaned them spider claws wrapping around that, man. I still got the graphic design. I ain't lost my touch, man. Spider Gang, hashtag Spider Gang, man. We answering polls, the IG poll questions. Let's get into it, man. Let's do this disclaimer, man. Let me stop wasting time. Y'all know what it is. I am not a financial. Say it with me. Say it with me. It's 2020. I am not a financial advisor. I am not a fiduciary. Nothing I say should be taken as financial advice. Do your own research. That's why we do Tim's Tidbits, so you learn how to do your own research. Investing involves considerable risk, and you should always consult a financial advisor before making any investment decision. I ain't a financial advisor. I know a great one. His name Dustin Tidbits. He my personal financial advisor at jazzwolf.com. I'm not a mentor. If you're looking for a mentor, I know a great mentor. My little sister, her name Kiki Williams, aka Stock Queenie. Stock Queenie on Instagram. Get at it if you want a mentor, if you want to be a part of a great community. stock queening. You know what I'm saying? The come up series, everybody know Mark and Jolene. Most of us, you know what I'm saying? Most of us come up cousins. They go live every Tuesday and Thursday on YouTube. The come up series YouTube is their page. The world famous Bun Bullets. I was just talking about the brother Jason Sweetie. You know what I'm saying? If you want to learn how to trade futures, that's a great place to start. One of the best in the business. Jay the Trader on Instagram. J_the_trader. Jay the Trader on Instagram if you want to learn how to trade futures. If you want to learn how to trade futures, the cousin Briscoe. I got to put Briscoe on the slide, man. I'm going to have to take somebody off. My slide getting long. Briscoe, what's your jump? Is it My Jumping Life? Is that the page? I don't know. Briscoe, put the page in the chat, y'all. You want them to follow if they want to learn how to trade futures, man. First Gen Wealth, aka the Run Up. Zay, what you call your stuff these days, Zay? If you on here, I don't know what Zay call this stuff these days. The runners, the run up, stock Zay. You know what I'm saying? He got a great community too, the runners. Amazing technical analysis trader, know a lot of fundamentals, be dropping gems on the Instagram all the time at StockZay. Learn with Lex, the young cousin Lex. I can't say enough about this phenomenal young lady, amazing with the fundamentals. Learn with Lex on Instagram. Finance on Fleek, that's Big Draco. Big Draco in the building, man. Prolific Prophecy Official. Draco nice with the futures too, man. Draco can help you with your finances. She can help you with your future goals as far as like getting your credit right and all that. Draco know all things finance, man. Charles Conant, aka Uncle Charles. Everybody in the community call him Uncle Charles. Uncle Charles say, hey man, don't be called. If me and you the same age, don't be calling me Uncle Charles. Wall Street Consortium. Book a 101 consultation with this man. He'll get you on the right track, man. Uncle Charles, Wall Street Consortium on Instagram. Trading with a Dummy. That's what I was talking about. That's the one that did an interview with Briscoe on his YouTube page. That's the homie Mark, man. Trading with a Dummy on Instagram and on YouTube. He do informative videos and funny videos about like the stock market, investing and all things investing and the mentality. He review different groups and different communities, and he do interviews with like different people in the community. Also, great brother, man. Support him. The homie Amit, he got a resume business. If you know, everybody don't want to walk away, everybody don't want to retire, some people like working, man. If you want to get your resume the right way, get at the homie Amit. His official brand resumes is their Instagram. They can help take your resume to the next level. The Professor, Day Trade Professor. I oopsed up on this man Instagram page, and he turned out to be a solid brother, man. So I added him to the slides. Day Trade Professor. Go to his Instagram. It's at Day Trade Professor. He got a lot of fake pages out there about him. If it ain't the one that I'm following, it ain't the Day Trade Professor. You know what I'm saying? So look for the one that I'm following. He got a whole free course on his if you click his link, if you go to the page daytradeprofessor.com, he got a whole free course about how to be a day trader and all that, and he go live every Tuesday and Friday, I think twice a week, every Tuesday and Friday at 8 and 9 p.m. Yeah, man, that's my family, man. Anybody else that I missed, I'm sorry I missed you. Charge it to my head, not my heart, and then put it in the chat if you do something. Let's get busy, man. We're going to get into it. We answering questions from the community today, man. The first question coming from David Ricky 51. Possible entries. Well, David, in the words of the homie Wall Street Trapper, you must be new here. Shout out to Wall Street Trapper, man. You must be new here. I don't give out entries, man. I don't give out entries on anything. But I tell you my two entry strategies. These are my two go-to entry strategies. Right? The first one, I call it the LRR, the Liquidity Run Reversal. I learned this strategy from ICT. Shout out ICT on Instagram. I mean on YouTube. And if you're not following ICT YouTube, you're doing yourself a disservice because he just restarted his mentorship, but he doing it live on YouTube. And to my surprise, the setup that he's covering in this mentorship this time is the exact setup that I call the Liquidity Run Reversal. I don't know what he called it, right? But I call it the Liquidity Run Reversal. And right, and I'm gonna jump to a chart and kind of show it. And But I'm explaining it to you first, right? The liquidity run reversal, what it is, right? I look for, like, the most times when I see it, it's coming out of consolidation. That's the best that it works, in my opinion, when it's coming out of consolidation, meaning when it's been consolidating all night through the Asian, consolidating through the London, then it like a lot of times it's combined with what I learned from ICT called the Judas Swing, right? Everybody know what consolidation is. And for anybody who don't know what consolidation is when the market is moving sideways, it's trading in a certain range. It's only going but so high and it's only going but so low. And it's just being a nice tight consolidation. That's what I be looking for. That's the initial part that I be looking for. And then I look for what ICT called the Judas Swing, right? And what the Judas Swing is, it makes a move either lower or higher. It, you know what I'm saying, it runs outside of the range, meaning it's consolidating and it runs outside the range to the downside, and then it immediately reverses back and runs outside the range to the upside. That's why it's called the Judas Swing, because it leads you the wrong way. And when you bite and jump in and you think it's going down, it leads you down. It spins around, goes back up, stops you out. Well, at first it goes down, stops out anybody that had they sell stops below it, right? It runs back up, stops you out and anybody else that had their buy stops above it, and then it reverses and goes down. That's why I call it the liquidity run reversal, because it shoots for liquidity to the downside or the upside, shoots liquidity to the upside or the downside if it's the reverse, and then it reverses and goes back in that direction. That's why I call it the liquidity run reversal. So it's liquidity, then reverse. That's why I call it that, and I show it to you on the what's the name, right? And my second go-to entry strategy is levels, right? And I showed this on my story, and if you, in case you didn't know, see it on my stories, what I do, I mark my levels every day. I don't just mark my levels. Shout out to little sister Kiki Williams. She mark all her levels, you know what I'm saying, for a certain amount of range, and her levels hit better than anybody that I know. I ain't never seen a levels trader as good as her, but I mark my levels every day. And the way I mark my levels is I mark the previous day's high and low, and then I drop down and I mark the most recent 4-hour high and low. And then I'll trade in that range. My first go-to is either, if I'm bullish, having a buy off of the daily low, and if I'm bearish, having a buy off the daily high level. And my alternate levels is having a buy off of the 4-hour recent low and having a sell off the 4-hour recent high. So those are the levels that I'm looking at. And Tim, you doing a whole lot of talking and you ain't doing no showing. Oh, my bad. Let me show, right? Let me jump over. I ain't got my Ninja Trader open. Y'all bear with me. Let me open my Ninja Trader so I can show y'all what I'm talking about, man. And shout out to the cousin Boyd in the building, man. Boy, hey, but don't sleep on Boyd, man. Boyd know his stuff when it comes to that ICT stuff. When the Judas Swing, Boyd know I'm talking about, the Judas Swing and all that. Boyd the one that really got me started looking at that Judas Swing. You feel me? All right, so let's look at the liquidity run reversal. Matter of fact, cause it did it Friday, and I wasn't even trading Friday, and I was hot. Okay, let's go to the 1 hour. Right, we're gonna go to the 1 hour and move this over here in the middle so y'all can see this. Make these candles big, make it big so y'all can see it. Make it big so y'all can see it. Okay, so peep it, right? So here we go. First of all, what you want to do, you want to figure out where is the market trying to go. You know what I'm saying? You want to figure out where the market trying to go. Let me put some daily candles up so we can see where is the market trying to go. So looking at these daily candles, right? See, so back on, we're gonna go way back to January 4th. I'm gonna put some lines in here so y'all can see it, hopefully. I don't want to I just thought about it when I said put some lines up here. Thought about how Joe Lee be like, don't say here, say the level. Don't say here, say the level. I'm so retarded. Let me make this line a little bit bigger, cause I noticed it be kind of hard to see the lines when I be doing it on the Instagram, and ain't nobody even tell me. Tell me it be hard to see the lines. Let's go with this gold. Okay, so here we go. Back on January 4th, we made an all-time high, right? We made an all-time high. You see my yellow line, right? And then looking at all of it, like, just let's pretend like we can't see all this. Let me move this over here. We can't see all this stuff. We see that it's starting to come down, right? We see that it's starting to pull back if you look to the right side of the screen. And you'd be like, okay, where's the market trying to get? The market looking for liquidity, right? So in the grand scheme of things, you say it's gonna be liquidity under this candle here because we got a little rejection off of that. So it's people that went long that's got they stops up under there. They got their sell stops up under there, right? It's gonna be some liquidity up under here because people that went long from that area got some sell stops up under there. And then you look down here and be like, I know it's gonna be a lot of liquidity down here up under these lows down here. So you be like, okay, that's where the market trying to get to. The market is attracted to those lows. That the overall market is going to them lows, looking for that liquidity, looking for those sell stops up under them old lows. So that's what the market is being drawn to, that liquidity, right? Right? It's going to that liquidity. So as you see, the market was selling off and it was eating that liquidity up. It's eating it up. You know what I'm saying? And it's still selling hard. So now we all the way down to this point right here, starting on we closed Thursday right here. So that's and then we closed Thursday there, and then we gap down and open around this area right here. don't say here, say the level. I'm so stupid. All right, so we open up here on Friday. That's what we opened it on Friday. So I'm just gonna leave that right there. I'm gonna leave that right. Well, that's the 9 o'clock open, so I might have to move it to really show it, but let's drop down to the 60-minute, right? Okay, we're gonna drop down to the 60-minute, right? And you see the 9 o'clock open. You see where we opened it right there, right? So that's the 9 o'clock open, the little fat line there. Let me I want to drop down and get it. It ain't got to be perfect. It ain't got to be perfect, right? So dig it. The Asian. We got the Asian session. Let me put a line. Let me draw a line around the Asian session. I'm doing way too long on this right here. I might not even be able to go through all my slides. Okay, so the Asian, right? The Asian session starts here. That's where the Asian session starts, right? I'm going to draw a little line here. Right? I'm going to draw a little line. Make it a little fatter so y'all can see it. Right? And what I'm going to do, I'm going to put this line at the top of the Asian session. Right there. And if you notice, the peak of the Asian session is a relative equal high right here. It's a relative equal high. The peak of the Asian session. Remember that. The high in the Asian section, the short-term high in the Asian session is a relative equal high to the day before. You see, they line up. This red candle right there and this green candle right here. They line up, right? And so I'm going to copy that. I'm going to copy that line, right? Copy that line. And then I'm going to bring it down to the low of the Asian session, right? That's the low. This the low of the Asian. This is the high of the Asian. The top blue line is the low of the Asian. The bottom blue line is the bottom blue line is the low of the Asian session. The top blue line is the high, right? We talk about the liquidity run reversal, right? So you see it's been consolidating all night. You know what I'm saying? From here to here, it's been consolidating all night through the Asian and the London. And then when we get right here at the New York Open, this 10 o'clock candle right here. This is when the New York Open right there at 9:30. If you notice, right, you got the liquidity run reversal. So we run at liquidity below the Asian. See these equal lows over here? We run at liquidity. This is the Judas swing. You go down and you shoot back up to the top. It led you the wrong way. Oh, we going down, we going down, we going down. Psych, Judas swing, come back up to the top. This is when you start looking for your entry on the liquidity run reversal. They go down, stop them, they go down to the bottom, stopping people out, eating up them buy stops down here, suck people in, saying, oh, we going down. Right? Anybody that went short up under these lows right here because they was like, oh, this is gonna act like support, because look at that support over there. Look to the left, it was support. Then it said it's broke support. So they jumped in right here. They went short right there. And then guess what? Judas Swing, whoop, turned around, stopped them back out, going up, right? It's going up, and then it broke these relative equal highs. It's this short-term high. It broke it. It's a relative equal high. It broke it. That's when you start getting a look in, because that's the Judas Swing. I told you, some consolidation combined with a Judas Swing. You start looking for your entry, right? So you're looking for your entry. I trade on the 15-minute. Let's look at it on the 15-minute chart, right? So boom, when it broke this short-term high right here, this is when I'm looking to get in. Now, I watch it on the 15-minute, but what I usually do, if I'm on the 15-minute and it ain't giving me like a perfect setup around the area that I want to get in, right? I'll either use my line as my entry. I'll just have my order set. Once it come back below here, once it go below it, I'll set me an order above it. So if it come back and bump it to pull me down, and if it don't get me like that and I miss it, I'll get in on this next candle right here. I'll get in there if it don't come back and get me on the line. Or what I do, I'll drop down to the 5-minute. I'll drop down to the 5-minute and look for a better entry on the 5-minute. And when you drop down to the 5-minute, what the 5-minute will do, it will give you a better entry with a lower risk. It'll help your risk to reward ratio if you get in, because looking at it on the 5-minute, once it break, boom, see it broke here. It broke on this big green candle here. You see it broke, right? And then it looked a whole lot better to come in on the 5-minute, because it's giving you a retracement right at the line. Remember when I said on the 15-minute, once it go below it, I'll wait until it go below it and then set my buy right above it at the line where I had it set. You see how it came back? It came back. Hopefully that would have picked me up, because sometimes it'll come back and kiss you and won't pick you up. But see how it came back and got it? Now, that's how I enter it. Let me show you a way that ICT teach to go into it. And I haven't perfected this, but I like the way he talk about it, where he'll drop down to like a 1-minute or a 3-minute and look for a fair value gap, right? Let me see if this one did it on this date. We're going to drop down to a 3-minute and see if I can see, because he always talk about a fair value gap where he jumps in as the train is coming at him. You know what I'm saying? When the train coming at him, when it's going the opposite way from where you want it to go, he'll jump in. Let me see if it's got a fair value gap up here. Okay, the 3-minute not showing one. Let me see if I can see one on the 1-minute. And then if I can't, I'm gonna move on, because I'm spending a lot of time on this. All right. Let me see if I can see a fair value gap, if it's an example on here. Okay, perfect. Okay, perfect. There's a fair value gap on this one here, right? So you see when it was coming down, when it was like it broke above, right? This is our line. Remember, this is our line, right? It broke above, and then when it starts selling back down, if you look right here, let me show you. Let me get a little rectangle. Don't say here, say the level. If you look right here, this area right here, there's a gap right there. It's on the 1-minute. ICT calls that a fair value gap. So when it broke the level, right, and it traded back down below it, right, when it started trading back down below it, it left a gap right here, and that's everybody know what gaps are, inconsistency in the market. So when it comes back to fill that inconsistency, that's when ICT teach to go short or go long, depending on where it is, in this little gap right here. And see, that would give that, like, there, if you would get in, if you did the top of it, you would get in at 44.82. If you did the bottom of it, you would get in at 44.79.50, and if you do it my way, you would have got in at 44.78. So the fair value gap would have gave you a much better entry and a much better risk to reward, right? So, and he called that a fair. That's how he teach to get in on it, like. And because he doing this actual setup on his new mentorship, and I don't know what he called it, but I learned it off his channel a long time ago, and I called it the Liquidity Run Reversal. And I noticed from learning about liquidity, learning about the Judas Swing, and learning about different things on his channel, that's how I put together the Liquidity Run Reversal. Because I was like, okay, it's consolidating, it run on liquidity. When it do the Judas Swing, it's running on liquidity to the bottom and the top, and then it's reversing, or it's running on liquidity from the top to the bottom, and then it's reversing. You know what I'm saying? So when it's going up, it'll go up, down, up, and when it's going down, it'll go down, up, down. That's why I called it the Liquidity Run Reversal. I done spent a whole lot of time on that, so everybody know how the levels work. I ain't even gonna show levels on the chart. So we just go jump back into we're gonna jump back into the slides, because I spent a lot of time on that, and my wife probably saying, you need to move on, you need to move on. Shout out Bully Franchise, no, the French franchise, Bully Franchise, the Rolling Fours. Bully Franchise, again, in the words of the homie, the Wall Street Trapper, you must be new here. I don't teach the Rolling Fours. I don't teach the Rolling Fours, but and that you must be new here. It ain't no knock on nobody. The Rolling Fours is a strategy that was I'm assuming coined and introduced to the community by Mark Monroe. That's who I learned it from, so that's who I'm giving the credit to. So if you go, what I did, I put together where you can actually go find it at. If you go to the Come Up Series YouTube page and look at an episode, it was posted on September 3rd, 2020. The name of it is September 3rd and a New World Rebuilt. That's when he first introduced the Rolling Fours. You got to look through, I don't know the timestamp. You got to look through that video. He started talking about the Rolling Fours in there. Then he got another video that he posted on October 7th. It's called Episode 4, The Rolling Fours. And he break it down in a little more detail. If you go look at those two videos, you'll learn everything you need to learn about the Rolling Fours. But I ain't gonna leave you hanging like that. I'm gonna give it to you in a nutshell. What the Rolling Fours are is like you deploy capital 4 times a year buying 2-year leaps on a stock or ETF of your choice. That's the Rolling Four strategy. You deploy capital 4 times a year, mean once every quarter. And if for some reason everybody be stuck on quad, which you don't have to do it on quad, which matter of fact, I'll address the quad, which in one of the slides coming up. But you deploy capital 4 times a year, putting them into 2-year leaps, and then you rotate it around. That's why it's called the Rolling Fours. Like, so you put in first quarter, second quarter, third quarter, fourth quarter, you deploy capital. The next year coming around, you rolling forward. So your first quarter, you rolling forward to a new 2-year, cashing in the one from the first quarter, you rolling into another 2-year leap. Second quarter roll around, you cashing in, you rolling into another 2-year. Third, you cashing in, rolling into another 2-year. Fourth, you cashing in, rolling to, that's the Rolling Fours. So 4 times a year, you deploying capital into 2-year leaps, and then you just rolling the profits forward every time the next year around. That's the Rolling Four strategy. But that's the way I understand it. But if you want to learn it from the person who brought it out to the world, go to those 2 videos on the Come Up Series YouTube page, right? Okay, here we go. We got Vita, I don't know, Carol T. Vita Divina Carol T, right? With the market correction and March quad witch, will there be more red days? Here's the short answer. Yes, there will be more red days. It ain't got nothing to do with quad witch. It ain't got nothing to do with this correction. There will be more red days. Red days is a part of the market. Red days are healthy for the market. You want red days. You don't want it to just always keep going up and up and up and up and never come down. Quad witch is totally irrelevant, right? I don't know why so many people focus on quad witch and make such a big deal out about quad witch? For those who don't know, and I think it's got something to do with like when we first was introduced to like the leaps and stuff, Mark was talking about it around quad witch because of volatility around quad witch. It kind of sometimes it yields great buying opportunities, and I think a lot of the cousins got stuck on the fact that quad witch is the time to buy. Mark never said that. I never took it as that. I don't think that's what he meant to imply, but a lot of people are stuck on quad witch. So for those who don't know what quad witch is when it's the date when stock futures, index futures, stock options, and index options contracts all expire at the same time. That's all quad witch is. It's because we have OPEX every week, every month. On the third Friday of every month, the monthly options contracts expire. We have OPEX. That's why it get volatile sometime around the third week of the month. You know what I'm saying? It get because it's they closing positions, they got to close positions, close out contracts, and moving into new contracts. So the market sees more volatility when all of that money is coming in and coming out. That's why it sees that volatility. And if you can jump in on one of them volatile swings to the downside, it might present a good buying opportunity. That's all quad witch is. It's nothing fancy, it's nothing magical, it's nothing majestic. It's just the day where options, stock options contracts, futures contracts, a stock option contract, stock future contracts, index option contracts, and index future contracts all expire on the same day. That's all quad witch is. For those that don't know, right? And what's more important than will there be red days is understand seasonality. There's always a bull market and a bear market somewhere. If you like to play it to the downside, know the seasonality and what sectors are going down. If you like to play it to the upside, know the seasonality and what sectors are going up. And if you know, just a quick little cheat code to trying to see a quick overview of seasonality based off the last 5 years is go to stockcharts.com and look at change it to seasonality and put in the ticker that you want. I done covered that plenty times on my page, right? And learn where to pivot to. Like if you're leading player, who's a good basketball player? What's the player name that was mopping the floor the other day? Everybody, he a good basketball player, right? Westbrook. If Westbrook is injured today, you know what I'm saying? Put another big man that can play, and I don't know basketball. I shouldn't have tried to do that right there. But anyway, if your main player ain't performing right now, switch over to another player. Know when to pivot. Because it's always a bull market somewhere. It's always a bear market somewhere. Just like right now, you know what I'm saying? I don't know. That's my point on it. And hopefully, Carol T, Vita Divina, Carol T, hopefully I answered your question. All right, let's move. Oh, shout out to my partner, Flex on Me. My wife said I said flex last time. Flex on Me. Flex like flex on me. She was blowing it up this time. All right, how to read the candles and what to do next, and charts and support and resistance. Why is it so important? All right, reading charts. Right, when it comes to the story of the candles, reading charts, you want the first thing you look at is the color of the candles, right? The color of the candles usually tell you the sentiment of that time period, right? And when I say time period, I mean like if it's a minute, it's that minute. If it's a day, it's that day. If it's an hour, it's that hour. So it usually tells the sentiment of that time period, right? The size of the candle, you know what I'm saying, including the wicks and the body, in my opinion, the wicks and the body, it tells you the momentum, right? So the bigger the candle is, the more momentum it has in that direction. The color usually, and I say usually because you can have a red candle, which means bearish, that's really bullish, right? If you got a candle with a long wick, the wick this long, and it's a little red body at the top up here, way up here at the top, that was a lot of momentum of buying. You see what I'm saying? That's why that wick so long, and you got a little red body. So that's a really bullish candle, but it's red. So that's why I say it usually tells the sentiment. So you got to know how to interpret the sentiment by looking at the momentum, looking at the wick in the body all together, right? So then, and that's how you read the candles. Like, okay, if it's a big red candle, you know the sentiment was really bearish. It was like pushing to the downside. If it's a big green candle, you know the sentiment was really bullish. It was pushing to the upside during that period. It was bullish sentiment. If it's a little red candle with a super long wick at the bottom, it's red, but the sentiment was bullish because the buyers pushed the sellers was able to get it down here, and the buyers said, nah, boy, get out of here. You too little, boy. Get out of here. Look at that long wick. And the same thing for the reverse. It can be a green candle, the body little at the bottom with a real long wick at the top. The buyers pushed it way up here, and the seller said, man, you better go get your big brother. Get out of here, boy. You know what I'm saying? And pushed it back down. The sentiment was bearish, even though it's a green candle. That's how you learn how to, just got to learn how to interpret the sentiment, and then just make a little story in your head. Shout out Jay the Trader. Jay the Trader used to tell the story of the candles, and I be having little stories in my head when I be reading the candles. You feel me? And then support and resistance, just like any other technical indicator, all this stuff is self-fulfilling prophecy. Tim, but why do you say that? Because it's like everybody's looking at this area for support and resistance, right? So we make that happen. Everybody looking at the same thing. Everybody looking at the same chart saying, oh, this used to be resistance. It broke it, and now it's going to be support now. This used to be support. It broke it. Now it's going to be resistance. Everybody looking at the same thing. So we all making it happen. And then guess what the algos do? Right? Because the algos are computers. They can't look and see, hey, look at this right here. No, all they know is when it get to this number, buy or sell. You know what I'm saying? So support and resistance, 3 black crows, morning star, EMA bounce, the death cross, the wedge, all of that is self-fulfilling prophecy, because these algorithms are, remember what I said on first slide, is looking for liquidity in a certain place. How is it going to get there? It has to get to this liquidity, and it's not just going to go in a straight line. Sometimes it fall faster than other days. Sometimes it shoot up faster than other days. But the only thing them algos trying to do is get to that liquidity so that they can sell or buy from a little dummy like you and me. You feel me? They selling and buying to us dummies that's chasing. Oh, AMC to the moon. AMC to the moon. Let's buy it at 400. Now it's worth $20. Oh no, my wife gonna kill me. You know what I'm saying? Hey, it's all self-fulfilling prophecy, man. And always remember, news trumps charts. News trumps charts. And why do I say that? Right? Algos go crazy when the Fed say the wrong thing or the right thing. Algos go crazy. They used to call them Jerome puts. Jerome puts instead of Jerome piles. Why? Because when he say keywords that the computer's listening for, when he say them keywords, the algos go crazy. That's why you thinking, oh, it's fun to do this, and that's when you see, what's up, Doc, in the building, right? That's when you see what they call a stop loss hunter, where to shoot down or shoot up, because the algos go crazy. You know what I'm saying? Because they hear a certain word, but then when it get back on track, it go back looking for that liquidity. Sometimes it get the liquidity when the algos go crazy. And then here's the gag. And what Jim Cramer said this years ago. It was a video floating around the internet. He said, and not just him, all of them, they put the narrative out in the news that they want to move the market in the direction they want to go. So they'll put out, it's not fake news. They put out the news that they know gonna set the algos off to move the market in the direction that they wanted to go. It's just, you need to understand where the market trying to get to. You know what I'm saying? Don't worry about all of these the pattern's cool. I use support and resistance. I use that. But my main thing when I'm trading, when I'm like trading on the futures, I'm looking at where the market trying to get to. I ain't worried about the patterns. Where is it trying to go? Is it almost to that level yet? Is it still heading to that? Is it still heading to that area looking for the liquidity? That's what you got to focus on. If you're a long-term trader, you shouldn't even care what an order block is. You shouldn't even care what a support and resist. You shouldn't care nothing about no technical analysis trading. If you're a long-term investor, man, technical analysis, you should know it, but it shouldn't even be on your radar. Why? Because long-term is more about the macroeconomics and fundamentals. Is this company or ETF still on the trajectory that my thesis is, that my thesis says? Because if you, like, what happened when the Fed talked on Tuesday, right, for a 30-year position, it's not even a blip on the radar. You know what I'm saying? That's gonna drive it crazy for the day traders. But overall, where to start? Let me pull up this chart. Let me go back to the thing. Desktop, camera and desktop. Let me pull up Ninja Trader again. Right? I was just talking to my wife about this today. Right? I'm getting off on a tangent right now, but it stay with me. Stay with me. Right? I'm gonna put it on weekly candles so you can see. Right? This right here is what year is this? Okay, this right here is April. What's this? 20. That's 27 April 2017. Dig this, right? This is April 2017. Let me put a line so you can see what I'm talking about. Vertical line. Right? Vertical line. Make it fatter so you can see it. Right? 4. And I'm going to make it red. So now, this line right here, this is April. This red vertical line that I just put up there, this is April 2017. Right? So April 2017, let's say you bought the this is the ES and it's 22, 21, 75. Let's just say you was able to buy one share of the ES. The ES this represents the S&P 500. So just say you bought the SPX at 22.75, or let's say the spot. You bought the spot at 222. Cause just say this 22.21. We're just gonna divide by 10 and drop the last. We're gonna drop the last digit. So 222. You bought one share of the spot, right? It went up. You got over here to what is this? 20, what is that? 2018. October 2018, you was up to $287. You went from 222 to 287, right? Then at the end of 2018, at October, your life flashed before your eyes. Cause it went from 287 all the way back down to 226. So you went from 222 to 287, and then in a flash over then in the flash of a whole month, you went all the way back down to 226, right? Then after that, your life got a little bit better again, and then in February 2020, you was up to $3.31. You was at the $3.31 and you was happy again because you bought in at $2.20 back in 2017. So now you up at $3.31, right? Then all of a sudden in February, the market started sliding because something called COVID came around, right? And then when COVID hit, guess what? It dropped all the way down to $2.10. You bought it at $2.22. 5 years ago, let me see, 17, 18, 19, 20, 3 years ago, you bought it at $2.22, and now it's worth $2.10, right? And then, guess what? Here we go, and January 4th, 2022, it's at $480. So you bought it at $2.20 in 2017. 2018, it dropped down to 260, and then it went to 210 in 2020, and then now in 2022 is worth 480. You know what I'm saying? So all of these little news crashes, and like 2018 was like a financial crash. 2020 was a COVID crash. So all this news and big stuff and this technical 3 black crows and death cross and all of that happened. Guess what? In a long scheme of things, for a long-term trader, an investor, it don't mean nothing. Because that $220 that you put in 2017 is now worth, it was worth $480 in January 4th, 2020. That's why I say all of this technical stuff, you shouldn't be paying no attention to that technical stuff if you're a long-term investor. Just stick to the script. Is it following my thesis? And we just gonna keep it moving like that. I'm going off on tangents today, man. And remember, price always draws to liquidity. I said that earlier, but remember that price always draws to liquidity. We talked about that already. Hopefully I was able to help you with that. Flicks on me. Oh my goodness, Flicks on me back up again. Flicks on me says a live example, stop limits, trailing stop, how to set it up. And then Butter Ross says how you determine and set up your stop loss and trailing stop to protect premium. So I can't really do a live example of setting up a stop loss because platforms gonna vary, but what I can do is break down like for you what you do. So when you gotta stop, some platforms say stop and some platforms say stop market. I usually don't use stop or stop market, right? Because with the stop market, what you do, you set the stop price, right? This the price where you want the order to activate. You got to remember, especially like when you're dealing with swinging shares, you know what I'm saying? I don't like that because you got to think about the spread. You got, the bigger the spread is, the more money you're going to lose with a stop market order, because you set the price. When you set in the price, this is the price where the system is going to activate your order. And if you got a market order, if you got a stop, it's just going to open a market order. And what does that mean? It's going to get you out at the bid. Right? It's going to get you out at the bid, because it's not going to give you the mid price, and it's definitely not going to give you the ask. It's going to get you out at the bid. It's going to get you out at the lowest price that somebody is willing to pay for it. Right? So with a stop order, you only set up one, you just set up one thing. You set up the price that you want to get out at. Right? And it's going to cut a market order. And then, so if you want to get a certain amount, you want to take into account the spread. You can't guess the spread on any given day. So just take into account the spread. So if it's a $5 spread, right? If it's a $5 spread, meaning it's $2.50 on each side of the bidding of the bid and $2.50 on the side of the ask, you might want to put your stop for $5 more than what you want. You know what I'm saying? Because it's going to get you out at the lowest price. Stop limit. With the stop limit, you set the price, right? That's the price you want to activate your order, and you set the limit. The limit is the price you don't want to go any lower than, right? And then when it hits that stop price, when it comes down to that stop price, the system is going to open a limit order for you, and it's going to get you out at the limit price. You know what I'm saying? At the limit price. Or like if your limit price is farther than the spread, is wider than the spread, you're going to get a better price. You know what I'm saying? Because it's only going to get you out the distance of the spread. It's not going to go lower than the bid. So if your limit price happens to be, if you account for a spread that's wider, like you say, if you set it for to get you have your stop set for $30, right? And you got your limit set for $20, right? And the spread is only $5. You know what I'm saying? You got the bid is 25 and the what's the name? The ask is 35, right? Then it'll get you out at $25, even though you got your limit set as 20, because your spread is wider than the actual spread. So with the limit order, and what happened, like if you do a stop limit, it can gap down below your order. Like if you got a stop market, it can't gap down below your order, right? Because if it gap down below your stop, it'll just skip you and keep going, and you just got to wait for it to come back. And then once it come back, it'll get you out at your limit price. You know what I'm saying? Or you get scared and then just go ahead and stop out for less money. But that's up to you. Trailing stops, right? Trailing stops, you set the amount in either dollars or percent, and then the computer will open up a limit order, and it adjusts like as your gains keep making newer highs, it keeps adjusting the price up. Like if you got it set to trail by $5 or 5%, you know what I'm saying, it'll stay 5% or $5 behind, right? If it go up $15, it's going to move it up to stay $5 behind. If it pull back $3, it's not going to move it, right? It pulled back $3, it's $2 away. Now it's got to move at least $7 or at least $7 before it move this stop again, because it's going to stay five or less behind if you set it at 5. You know what I'm saying? Hopefully I ain't confused nobody. It keep moving it up, but as it start coming back down, it don't move it down. It leave it there, so it'll come back into the stop. Because it's stopping you from it's trailing by the amount you say. You saying I wanted to trail and I don't want to lose no more than 5% or $5. So it's gonna stay. Once it make a new high, it's gonna stop 5% behind. If it pull all the way back 4%, it won't move. That stop ain't gonna move. But if it go back up 6%, then that stop and move up. It go 10%, that stop and move up. If it pull back 8%, you getting stopped out because you 5% behind. That's how the trailing stops work. So you set the dollar amount or the percentage amount you want to trail, and the system will cut an order for you. The stop limit, you set the stop price. That's the price where you want to activate the order, and the limit price is the price you don't want to go no lower than. And then on the stop market, you only set the price, and when it gets to that price, the system cuts a market order. So you want to account for the spread. You want to account for the spread in all of them. You want to account for the spread in every last one of them. But the stock market, that's the one you really want to account for, and that's the one you got to know. If it gaps down below your stop, it's going to stop you out at a horrible place. You know what I'm saying? Horrible place. I see a link. Oh, that's Briscoe. I'm finna kick somebody out. Somebody spamming my chat. That's Briscoe. You good, Briscoe? Do your thing. Last slide. Coming in from Silent Gainer. Is Apple the cheat code for the SPY? Looks like they moved together, right? Let me see. Holding the allocations. I put this up on the holding the allocation because when it comes to stuff like this right here, you want to, if you're looking at ETFs, you want to know what companies are in this ETF or index. You want to know that. You know what I'm saying? You can go to stuff like CNBC.com, Yahoo Finance, ETF.com, ETFDB, and look at what's the holdings in this ETF, and what's the capital allocation to each one of these, right? Pay close attention to the capital allocation, or it's called the weighting. And why you want to pay attention to that is because the higher the weighting, the more of an influence that stock is going to have on that ETF, right? And keep up with the earnings calls in the news on the top 10. At least keep up with that stuff. You know what I'm saying? Of the top 10 on the ETF, you need to know that stuff. And he say that Apple look like they move together. Why is that? Apple is a huge company. Apple is like almost $3 trillion. It's like $266 trillion right now, I think, right? And Apple is 6.8% of the SPY. And Apple is a market mover. So Apple is 6.8% of the SPY. It's like the largest holding in the SPY. And then the SPY itself, the S&P itself, is made up of over 30% of tech. So tech is very heavy on the SPX because it's over 30%, right? And I'm leaving you hanging on YouTube. What? Yeah, it's like tech is over 30% of the S&P, and Apple is huge. Apple is like the juggernaut in tech. So as Apple and Microsoft goes, so tech goes. And tech is the heaviest portion of the SPY. So as tech seems to move, the SPY seem to move. The tech, SPY, the bank, tech, the banks, and stuff like that, they weigh heavy on the SPY. So if you look at their charts are going to look similar because Apple is a market mover. So it's gonna look, Apple chart gonna look like XLK. You know what I'm saying? Apple chart gonna kind of look close to the SPY. They gonna seem like they move together. But if you look at Apple chart and XLK chart, they look almost identical because Apple moves the market. Apple is a market mover. So hopefully I was able to help you out with that. The cheat code is knowing what at least the top 10 in your ETF is doing, so to understand how your ETF gonna be moving on a daily, weekly, monthly basis, man. That's all I got, man. That's all I got for this segment, man. How did I do? Do we got any questions? How did I do? Do we got any questions, man? Any questions? You see any questions, baby? When do I trading with a dummy axe? When do you recommend initiating a trailing stop? That everybody's risk tolerance is different, right? You should initiate your trailing stop in accordance with your plan. What does your plan say? Know when you're going, before you get into the position, know when you're going to get out, for the good and the bad, right? For the good and the bad. Know when you got. Some people trading plan don't incorporate a trailing stop. Some people, I incorporate trailing stops because I learned my lesson of watching positions go 50% in the green to all the way 80% in the red and praying that it get back. So know your plan. What does your plan say? That's my answer to that one. Appreciate that. Appreciate that, T-Shank one. I appreciate that. Wear the suit and tie. It's in the closet. That's it. All right. My sweetie say she don't see no more questions, man. She don't see no more questions. I know it's like a 15-second delay, but I'm gonna get ready to sign out. I'm gonna give you 15 more seconds. Baby, you want to come in and say hi? Oh, she said hi, y'all. She don't want to get on camera today. What's up, Abby? Oh, Abby. Man, I forgot to shout out. I got to put Abby on the slide, man. I'm gonna have to take some names off, man. I'm gonna have to take some names. I'm running out of room on slides. I think I'm gonna have to take off some of the old juggernauts that been on there because I got to make room for my family, man. My family big. Y'all get at the relationship accountant. She be dropping gems. She seems super knowledgeable to me. If she ain't super knowledgeable, she a great actress. But yeah, get at the relationship accountant. She a tax strategist. One of her specialties is helping people like you and I trade as a business and track like the best way to trade. I don't know. Get at her, man. Relationship account. I ain't gonna try to pretend like I know everything she do. What these numbers for? What at 14, 15, 13, 12? What them numbers for? Boy, what you putting them numbers up there for? Everybody putting numbers up there. Oh, he counting the seconds. Oh, man, I know what he doing, man. I hate you. Hey, man. Y'all know what it is, man. This has been another episode of Tim Tidbit, man. I'm so glad y'all take y'all time to come in here and listen to me. I'm just a simple dude from Fort Lauderdale, Florida. I don't know everything. I ain't the best at nothing. I learned something, and I'm sharing it with all of my family out here, man, because, like I say, it's money out here to be made. If you understand what you're doing and you got discipline, you got patience, you can make money in this market. Everybody don't want to walk away from their job. So it's just another way. It's added streams of income, man. We got to build this new Wakanda, and we going to build this new Wakanda, and I don't want to be there by myself. I want my whole family to be there with me. That's why I put it out here for free on Al Gore's internet. Till the next time, y'all know what it is, man. I lost my train of thought. I was gonna say something else, but I guess I'll catch you next time. Anyway, I'm gone.